We all have heard about the importance of owning assets. How they secure our future. How do they help us utilize excess cash? So on and so forth. But, like most things in life, there is always a hierarchy of assets that one must look at before deciding to invest. In today's video, that is exactly what we will be doing. We would be looking at the top 9 assets that can make you rich. We would also look at the pros and cons of individual assets so that a clear picture is there in front of you, which will make decision making much smoother. Before we begin, I would urge you to like the video, which helps with the channel's reach. Also, make sure to subscribe to the channel with the notifications on, so you don't miss out on the latest videos. Let's begin. The first step to owning an asset is to understand what an asset essentially is. Here, I would go with the definition given by Robert T. Kiyosaki, in his world-famous book, Rich Dad, Poor Dad. The definition is very practical. It essentially defines an asset as any entity that adds net cash to our pocket. Now, everybody wants to get rich, and there is certainly a rise in the awareness levels of people, especially in financial planning. So, I have decided to make this video on the best asset classes one can invest in to create generational wealth. Asset 1, a business. A business, as we have discussed previously on this channel, is the fastest way to grow your wealth. Unfortunately, you gotta take the highs with the lows. Businesses can be extremely risky, something a lot of people may not have the appetite for. The essential idea of a business is to find a gap in the market and then provide a product or a service to fill that gap. Most billionaires have made their money with business. Jeff Bezos, Steve Jobs, Bill Gates, Elon Musk, to name a few. Another thing to understand about businesses is the fact that businesses have low liquidity. You can't randomly leave your business. There are major exit barriers. That's why, before we decide to venture into any business, we must have a thorough understanding of the business and also be mentally prepared to deal with the setbacks. Asset 2, real estate. John D. Rockefeller, one of the richest men in history, once said, "The major fortunes in America have been made in land." The same sentiments were shared by a contemporary of Rockefeller, a famous fellow by the name of Andrew Carnegie, who once said, 90% of all millionaires become so through owning real estate. Of course, there is a major flip side to real estate as well, especially in India. Similar to a business, real estate is also low in liquidity, so in case of an emergency, real estate cannot be liquidated, unless you sell at a loss. Secondly, most real estate is purchased using leverage, that is, there is a debt or loan involved. This creates a major hurdle. Loans can be very helpful to multiply gains, if you can manage to make gains, but, if there is a loss, then that also gets multiplied. Asset 3, paper assets. These would include your stocks, mutual funds, bonds, and similar others. I have explained the different investment options in detail in another video. The link will be in the description. Asset 4, commodities. Commodities include items such as gold, silver, oil, and many others. Gold and silver in particular are great hedging options against market fluctuations. So, even if the rest of the portfolio is underperforming, assets such as gold and silver will continue to grow and provide a safety cushion in times of distress. Asset 5, good old cash. Now, a lot of you might say that keeping hoards of cash in your house is not the smartest idea. It is also true that cash by itself doesn't even generate any returns. All that is true, but hear me out. Companies like Apple, Berkshire Hathaway, or Indian giants like Reliance, Infosys, etc. keep cash with them. The reason is that there are always opportunities in life that may arise without informing. In that case, being cash rich can make the difference between making enormous money and crying over a missed opportunity. On a retail investor level, imagine a recession hits and all assets lose their value. In such a situation, who do you think will be able to profit the most? It would be the guy with cash. He will be able to purchase a lot of assets at much lower prices because he is cash rich, and then later when the market rebounds, he can sell the assets at a much higher price and pocket all the profits. So, keeping cash is not a bad idea. In case of a sudden opportunity, cash can be very helpful. Asset 6, machinery and equipment. For example, a car could be considered as an investment, if you decide to use it as a taxi, either yourself or rent it out. Similarly, a tractor could be an asset that increases productivity. So, even though there is not a direct correlation with money, these are still classified as assets because there is a large indirect return on investment. Another example could be a laptop. I use my laptop to record and edit my YouTube videos, so my laptop become an asset for me. Hope you get the point. Asset 7. Intellectual property. These include patents, copyrights, trademarks, etc. It means, as a creator or inventor, you have the right to usage of your invention. Every time someone uses your invention for commercial purposes, they need to pay a part of the sales to you. An example would be new software that you might develop, or in the case of pharma companies, if they create new medicine. Another example would be authors who may write an amazing book, and get royalty till perpetuity on those sales, along with a share in profits if a movie or TV show is made based on the book. An example would be Game of Thrones or Harry Potter. Asset 8. Brand value and goodwill. It is intangible, so it can be difficult to precisely monetize branding and goodwill. But, we all know, from our own experiences in life, that making effort into creating a name for yourself goes a long way. There is a reason why companies spend millions on branding and PR. They understand that purchase is more of an emotional decision than a financial one. It is also true in the case of individuals. You will like and subscribe to my channel only if the content quality is up to the mark. More importantly, you will continue to stick by me as long as I continue to deliver on my brand promise of high-quality content. Brand and goodwill are linked with trust, which is what drives most purchases. No matter how expensive that damn iPhone is, we want it because there is a brand value attached to it. Asset 9. Content. Content could be a song you create, a video, a blog post, a book, and many such things. Content is an asset because it drives the money for a very long time. In the digital era, the content remains forever, therefore, at least theoretically, you can make money till perpetuity. Think of this YouTube video. It may not garner a lot of views today, but as the channel grows and more people get engaged with the channel, this video will one day become monetizable. This video is an example of a digital asset. The same goes for movies, OTT shows, and other social media. Content has the power to create long-term wealth for you. So, this brings us to the end of the video. If there is an asset class that you think should have been there on the list, comment below to let me know. Like the video and subscribe to the channel. Take care of yourselves and your families. God bless us all. Thank you.